Our top story right now, of course, McDonald's. It fired CEO Steve Easterbrook after he engaged in a consensual relationship with an employee that, of course, was in violation of company policy. Now, as part of the separation package, Easterbrook will not be allowed to work in the fast food industry for 2 years. Joining us with more on all of this, Yahoo Finance's Julia LaRoche with more of the details, which caught a lot of us by surprise today.
Yeah, well, Adam, the board voted to oust Steve Easterbrook on Friday. They announced that decision on Sunday. Now, it's unclear if it was actually a unanimous decision, but we were told that it was a thorough process. And you were just referencing some of those separation agreement terms and that Steve Easterbrook can't work in the fast food industry for another 2 years. And that's actually a big deal because he's someone that competitors would likely want to snap up. He is a lifer at McDonald's. He joined the fast food giant in 1993, and he's held a number of key leadership positions. He really worked his way up the ranks, running the UK business, the European business, and then taking over as CEO in March of 2015, really getting those same store sales growth up for just several consecutive quarters. Also revamping the restaurant experience through technology, making it a better place to work, updating the uniforms, things like that actually mattered to people. The franchisees loved him. The Wall Street community really liked him as well. The stock surged during his tenure. So this was a big surprise.
Yeah, it definitely was. Thank you so much, Julia. We're joined by this hour's panel to discuss this further. TD Ameritrade Chief Market Strategist J.J. Kinahan and Yahoo Finance's Editor-in-Chief Andy Serwer. Also joining us on the phone, Bloomberg Intelligence Analyst Michael Halen. Michael, you just heard Julia speaking about Easterbrook's tenure at McDonald's and what he was able to achieve. Certainly the stock did well. U.S. same-store sales, though, have been choppy in recent quarters. So is that something that the new chief now needs to address?
Yeah, you know what? There's been some concern, some talk that it was choppy because traffic has been down, right? But guest counts have been traffic across the industry. I mean, most chains would kill to be generating mid-single-digit same-store sales comps, especially a brand that's been around as long as McDonald's, and one with AUVs, around 2.6 million. So, U.S. is humming along. And the new CEO, Kempczinski, was in charge of the United States, right? So he knows that business very well, and we don't see really too many problems ahead in the near term.
So you don't see too many problems in the near term. Easterbrook was a lifer, basically. The new CEO has been there, correct me if I'm wrong, 5 years. What should an investor right now on the sidelines pay attention to so that they don't make a mistake, either pulling out too soon or staying in too long?
Yeah, that's a great question. I'd say right now this transition causes some uncertainty on the long term, right? So when it comes to the short term, you're not going to see any change, in plans, right? And these plans that McDonald's are following are probably laid out through the next 2 years, right? So we're not going to see any slipping, in terms of same-store sales. We don't think over the next year, maybe year and a half. Right. But on the longer term, we don't know. Mr. Kempczinski hasn't been a CEO anymore prior. Right. We don't know how his relationship with franchisees will be going forward. He has a great track record over the last 3 years in the United States. So that gives us some confidence. But, for the longer term investors, I think there may be concern that things could change down the road, right? Because you can make a very strong case that Mr. Easterbrook was the number one CEO in the entire restaurant industry.
Hey, Michael, J.J. Kinahan, how are you? So I think one of the concerns coming off earnings, though, and I don't know if it concerns you, is you talk about the same-store sales doing better, at a 5.9% growth compared to 5.6%, which is awesome. But isn't one of the concerns that they were so reliant on the promotions, the buy one, get one free, et cetera, that if they take that away, although the margins may increase, it could cause a slipping of the sales? And as sales increase, is it due to this and margin going to continue to get cheaper also?
Yeah, there's some concerns. Well, I mean, listen, traffic is the number one concern. And the fact that they're basically improving their same-store sales by getting customers to purchase higher-priced items is a concern, right? Because the more prices get increased, the more traffic might dip, right? People may decide, I'll just brown bag my lunch or go somewhere cheaper, right? So there is that concern. But a lot of this has been technology-driven. So it's been through the mobile ordering. It's been through the kiosks, and then now with the suggestive selling on the digital drive-through menu boards. So a lot of this has been technology-driven. The new CEO, Kempczinski, has been a big proponent of these things. So we think that this technology is actually, a competitive advantage for McDonald's. McDonald's was really behind most of their peers in terms of technology before Easterbrook stepped in, and they've caught up and passed their rivals really quickly. So we think this is, like I said, this is a problem for all of the restaurant industry. There's just a lot more competition coming in, whether it's grocery stores, convenience stores, you name it, right? We think they're in a much better position than a lot of their peers.
Michael, let me ask you, the stock's down about 5% today on this news. And the other thing, though, the question I have about McDonald's is innovation in terms of the menu. And, all we've talked about the past several months is chicken sandwich mania. And they're not there. And so don't they have to really step up in terms of adding things to the menu?
Yeah, that could be an opportunity, and there's some talk that there's going to be a chicken sandwich, a breakfast chicken sandwich released sometime next year through McDonald's. But yeah, so if you're able to put up a 5% comp over a 3.5% comp next year, the year prior, I mean, those are very, very impressive. And so not having a very strong chicken offering, we see that more as a big opportunity for them than something we're kind of worried about.
Michael Halen, it's good to talk to you, Senior Restaurant Analyst at Bloomberg Intelligence. Thank you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.